I'm coming to you on July 3rd, a half day in the markets, and we're going to show you a real time short setup. We initially put this out on on yesterday in ARNA Pharmaceuticals, and it went a little higher today. Our stop did not get hit, and we're actually adding to the position right here, and I'm going to show you how this does a good job. This setup does a good job in explaining the structure of my 3-day chart swing method. So why do I like the short setup in ARNA? Well, you can see right here, which was, let's just see what day that was, June 20th, ARNA left a key reversal day from a new recovery 60-day high. It reversed, closing below the prior day's low for a key reversal day. This is in league with 3 drives up to that high. And after breaking out, just a nominal breakout above this little flat and a mini cup and handle, it fails, and the next day immediately slices below its 20-day moving average. It's rising 20-day moving average. In a bull market, the 20-day, a test or undercut of the 20-day should act as support, as it did here. You had a little undercut of the 20-day, recovered it, and extended to new recovery highs. So following the break with authority of the 20-day, ARNA continues below its 50-day, the blue line here, with a large range outside day down. The 3-day chart turns down when you get 3 consecutive lower daily lows. This occurred right here actually. You have 3 consecutive lower daily lows, and bearishly it continued lower. If the trend is up, the turn down in the 3-day chart should define a short-term low both in time and price. Now, following a little NR 7-day, a narrow range day, the narrowest range in 7 days, which often leads to an expansion in volatility, that perpetuated a backtest of the 50-day line this morning. That also coincided with a turn back up of the 3-day chart because you have 3 consecutive higher daily highs. Going to the 10-minute, you can see the play-by-play ran up this morning, and it has triggered an opening range break on trade back below the morning low. So that's another bearish fly in the ointment. Looking at the weeklies, always want to use multiple time frame analysis. The same idea of 3 drives to a high that we flagged on the dailies. You can see this a similar pattern here on the weeklies. First drive, second drive, third drive. So the 20-week moving average is just below right here. You've got an outside down week. That bounce back that we've seen into today occurred from a test of the 20-week moving average. The weekly turned up. My take is that the 20-week moving average is going to break, and the 3-week chart will turn down, and that could very well elicit a decline back to this support and a test of the 50-week moving average, which has not occurred since the summer of 2017. So on the 1-year cycle, it looks like ARNA, the series of distribution days and the structure indicates a test of the 50-week moving average back towards the 35 strike. That's it for now. Have a great 4th, and we'll speak to you on Thursday.